Nombor metrik 23 DPS 25F1055. Function of SSM, the Companies Commission of Malaysia, Suruhanjaya Syarikat Malaysia, SSM, is a statutory body established under the Companies Commission of Malaysia Act 201. It functions as the regulatory body for companies and businesses in Malaysia. Another significant function of SSM is to promote transparency and good corporate governance by providing clear guidelines, conducting training sessions, and offering educational programs. SSM helps business owners and directors understand their duties and responsibilities. This not only improves the standard of corporate governance in Malaysia but also builds public trust in the business environment. Overall, SSM does not only act as a regulatory but also as a facilitator, educator, and advisor. By combining registration, compliance, monitoring, enforcement, education, and policy advisory, SSM plays a vital role in maintaining a transparent, trustworthy, and business-friendly environment in Malaysia. Main function for SSM is: number 1 is company and business registration. Number 2 is corporate governance and education. Number 3 is regulation and compliance. The function of Inland Revenue Board of Malaysia, known as IRBM or LHDN. They has tax administration, taxpayer service and education, policy and advisory role. Tax administration handles assessment and collection of income tax, property, income tax, payer service, tax stamp duty and other direct taxes. Taxpayer service and education, they also provide service and publishes tax guidelines. They also conducts education and awareness campaign to encourage voluntary complaints. Policy and advisory role, they advise the government on taxes related policy and reforms. They also conduct research and students to improve Malaysia taxation system.
Hi, my name is Putri Sofiana Jobakis binti Putra Juliadi. My matrix number is 23DBS25F1007. There are 3 main types of accounting that I will discuss, which is auditing, taxation, and financial accounting. Auditing means an independent examination of financial statement to make sure the information is accurate and follows the accounting standard. The main function of auditing are to detect errors and fraud and build trust with investor and authority. For example, an external auditor checks a company's annual report before it is submitted to SSM. Okay, second is taxation. Taxation refers to the process of assessing, calculating, and reporting tax based on tax law. It's important to provide income for government development. For example, a company prepares its corporate tax return and submits to LHDN. Okay, lastly is financial accounting. Financial accounting involves recording, summarizing, and reporting business transactions to produce financial statement. The function include recording daily transaction, preparing reports such as the income statements and balance sheet. For example, a business record monthly sales and prepares financial statement at year end.
Assalamualaikum and hi everyone. My name is Natasha Adriana binti Abdul Azim. My metric number is 23DBS25F1015. Today, I will explain some important accounting concepts and simple examples for each. First of all is the materiality concept. Material concept means we only record information that is important for decision making in a very small amount that do not affect the financial statement can be ignored. For example, if the business buy a calculator for 20 ringgit, we record it as an expense, not as an asset. The reason is because this amount is too small to change the overall picture of the accounts. For the second concept is accrual concept. The accrual concept says that income and expenses are recorded when they happen, not when the cash is received or paid. For example, if a hair salon provides service in September but the customer pays in October, the income must be recorded in September. This shows the real performance of the business during that period and avoid giving the wrong impression of profit or loss. For the third one is business entity concept. The business entity concept means that the business and the owner are separate. The owner's personal activity should not be mixed with the business accounts. For example, if the owner buy groceries for the family, that purchase is not recorded in the business account. More than that is matching concept. The matching concept says that expenses must be matched with the income they help generate in the same period. For example, if a cake shop sells cake in July, the cost of the flour and sugar used must also be recorded in July. This way, the income and related expenses are recorded together, giving a true picture of the business profit. So, last but not least is the going concern concept. The going concern concept assumes that the business will continue to operate in the future. For example, if a shop buys a fridge to store drinks, it is recorded as an asset and depreciated over many years. It is not treated as if the shop will close tomorrow and sell it immediately.
Hi, my name is Muhammad Danish Imran, and here I will explain what a purchase invoice is. So a purchase invoice is a document that supplier sends to a business to ask for a payment, and it shows what goods or services were supplied and how much the business need to pay. Okay, and why is a purchase invoice is really important? It is worked as a proof of purchase and as a payment request, and it also helps the company keep track of finance, handle tax records, and manage its inventory more easily. So in short, a purchase invoice helps both the supplier and the buyer to stay organized and clear about what has been bought and how it should be paid. Secondly, I would like to talk about sales invoice. The sales invoice is a document that seller sends to a buyer, and it lists the products or services sold, the quantity, prices, and the payment terms. Okay, and why a sales invoice is important? Because it helps a business to keep its accounting organized, manage its inventory, and provide accurate data for analysts. And they also make it easier to calculate financial earnings in quarters. So basically, a sales invoice is the opposite of a purchase invoice, and it's from the seller side, and it is used to record and manage sales.
Hello, my name is Alif Iman Yusri bin Ayub. My matrix number is 23DBS25F1051. Here I will explain the third source document, credit note. A credit note is a document used by the supplier to notify the reduction amount of sales previously charged to the customer. It is normally issued by the supplier to the customer when the customer returns inventory to the supplier, or when the amount written on the early invoice has been overstated by the supplier. The customer's debt will be reduced by the amount stated on the credit note. The credit note contains the date, description of item, total value of reduction, and the name of person in charge. As you can see on the right, this is an example of a transaction for a credit note. Next is a debit note. A debit note is a document used by the supplier to notify the increased amount of sales previously charged to the customer. It is normally issued by the supplier to the customer when the amount stated in the invoice has been understated, or when the additional charge has been imposed by the supplier. The customer's debt will be increased by the amount stated on the debit note. The debit note contains the date, description of items, total value of additional amount charged, and the name of the person in charge. On the right is an example of transaction for a debit note. And the last one is a memo. A memo is often used as a note on certain business events that need to be announced if no other document exists, and is usually circulated internally within the business. These are an example of memo and a general journal.